Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, February 1st, 2023. I think I'll start with the day and work our way to the long term. Just want to recap just a little bit here. We had the 1/3 speed line that did essentially contain that would be Tuesday's low. We missed it by a hair. It rises today to 164.81. And then we, of course, had that long-term channel bottom that I can show here on the monthly chart. Not that is the wrong one. This here, it's at 164.09 all week long, but on the daily charts at 165.71. Don't want to throw too many numbers at you. Trying to see if there's anything else anywhere else. No, that would be it. So I'm going to go back to this chart. 165.71 down to 164.81 is our trend defining support, and it is pullback support, and above which we've entered a longer term secondary buying dynamic following the settlement last week above these channel structures that are presently in the mid 150s to mid 160s. And so we should, as I've been saying, over the next few months, push into this 258.62 long-term descending channel top. Now, there's certainly going to be trouble spots on the way over the next week or two. 193.87, a new descending 1/3 speed line that I've talked about in recent days. We've got 221.25, which is the rising 3/8. This is pretty stair step, pretty normal stuff on the way up. But the bottom line is, holding above, well, this is some of it here, but I'm going back to this chart. Rising 1/3 speed line off that move low from about a month ago, taking into account the recent high from last Friday, 164.81, with that former channel bottom at 165.71. This is an area that can contain selling through February, and above which 193.87, which isn't far from where we are presently. We could easily reach that by the end of next week. Remains a 1 to 2 week target. Over the next 3 to 5 weeks or sooner, 221.25, and as I said, the 230s, 240s over the next few months. So this is nothing new. On the way up today, I'll use this chart. I don't have it illustrated, but I've got 173.84 as a soft intraday pivot point that can contain intraday buying pressures. It is from Friday's high against Tuesday's low, a 5/8 upside Fibonacci. We did push through it a bit. We did not close above it on Tuesday. If we push or open above 173.84, 179.83 is likely again on an intraday basis. And that is this former longer term low that was put out in March of 21 that we've retraced to now for several days in a row. Well, I don't know about several days in a row, but going back to this chart here, over the last, that was a Friday, Monday high. And so 179.83 may well contain daily buying pressures again, but be careful. This market does remain bullish into later February above the mid 160s, 164.81 to 165.71. And if we do close today above 179.83, I'll give it 2 to 3 days before reaching that long-term speed line that is presently at 193.87. 193.87 able to contain buying through next week. And from here, we could fall back into the mid 160s again within a week or so of testing 193.87. But 193.87, following the settlement last week, back above this channel structure, is certainly susceptible to violation. I'm expecting as much, not necessarily on the first attempt. That's why I've got it as a 3-star weekly resistance that may well contain buying through next week, and from there we can fall back into the mid 160s. But closing above 193.87, certainly don't anticipate that today, but we might actually, by the end of the week, by Friday's close, actually settle above 193.87. And if so, then by the end of next week, perhaps, we could reach that 221.25 long-term 3/8 Fibonacci. Was based on the two extremes that you see here, A, B. A being the all-time high from 21 against B, the more recent early January low. We can top out there for a week as well, possibly into March trade and fall back again, so forth and so on our way up to 258.90, which remains a 2 to 3 month objective above this zone of support, now formerly resistance. So that's really sort of covers the upside pretty well. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. I'll go back to this chart here. We've got 164.81 to 165.71. Our base of support. If we break it, if we break 164.81, I do think that this rising channel bottom, I know there's a lot here, but it's at 160.05. So if you follow this 1 month channel bottom, steeply rising channel bottom, it's 160.05. Now this may well contain daily selling pressures, but we do need to get back above 165.71 by the closing bell, settle above it to keep this market in a sort of near to midterm bullish structure where those upper targets that I've already mentioned remain those time horizon objectives. If we close below 164.81, this rising 1/3 speed line, I think that is the tipping point south into next week. Closing below 164.81, 133.77 becomes a 1 to 2 week target where we could bottom out on a weekly basis, possibly through the balance of February. We'll take it one step at a time in terms of downside targets. I'm not anticipating this long-term support region any longer unless we once again close below, and this I'm talking 89.41 to 101.12. This is an area that we actually did test. This was targeted support that did contain monthly selling pressures as was anticipated. And what was then anticipated, if you recall, was merely retracing back up to these former channel structures. And I had thought we could actually fall off from there again, but that positive earnings was certainly a positive development. And so now we are above this zone, 2 month target, 2 to 3 month target, 258.62. So what I'm really outlining here is if we close below 164.81, this rising 1/3 speed line, the rising 2/3 speed line at 133.79 becomes a 1 to 2 week objective. With this kind of volatility, and if we close today clearly below 164.81, we may see 133.77 by the end of next week, where we could bottom out through the following week. And not unless we close below 133.79 would I then anticipate a 2 to 3 week objective back to this longer term support in the 89.41 to 101.12 region, I think better illustrated here. I don't think that there's really anything else to say. If you'd please click like and subscribe every time you watch the Daily Tesla Report, I would appreciate it. All these minor points, by the way, have been carefully chosen. They all have meaning. They're all very well suited for aggressive day traders, but it is the heavier weighted ones that have trend defining elements. And so once again, closing below the 164.81 speed line, we are bearish into next week, anticipating the 133.79 speed line. And of course, if we close below 161.17, that adds more weight. And if we close below 160.05, that adds even more weight, so forth and so on. So once again, breaking 164.81, 160.05 is expected within the day. If we close below 164.81, I'm expecting 133.79 probably by the end of next week. On an intraday basis, we could break 164.81, tag 160.05, and then rally back. And as long as we close above 164.81 to 165.71, we're still in a bullish dynamic as we move into later February and over the next few months, still anticipating 258.62. You know, I think that pretty much rounds it out for Wednesday's Daily Tesla Report. I'll be back tomorrow with Thursdays. Please click like, subscribe, share with friends and colleagues. I'll be back soon. You have a great day.